Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
You're going to hear about a couple of more popular names for you to consider in the stock pick realm from our strategists Ryan McQueenie and Brian Boland, who joins us live on the remote. Brian, let's get right to it. We're going to start with you. What do you have?
My top stock pick of the week is Tesla. Ticker symbol is TSLA. It is a Zacks rank number 2, and that's a buy. And it has an F for value, which I know a lot of people care about value scores, but I don't really care so much about that style score. I care about the growth. It only has a C, but I think we're going to find some very interesting characteristics about Tesla, which made me select this one as the top stock pick of the week. Obviously, Elon Musk, the CEO, yesterday bought just about 33,000 shares of the stock. It's a $10 million in investment, which isn't a ton, but it is a statement. And let's take a look at why he is making that statement. If we take a look at earnings estimates, the company just reported the most recent quarter, and then has also talked about the next 2 quarters being profitable. The estimates have been moving the wrong way, as you can see, from a loss of $1.54 to a loss of $2.51 for the next quarter. But that number should actually be going the exact opposite way, and we see the right measurement moving for the next quarter. So I think the estimates here are just a little bit stale, or not in completely. We can see the same idea here for the current year. 90 days ago, the expected loss was going to be $5 per share. Now we're up at almost $8 per share. But lo and behold, look at next year. Expecting a gain, $2.46. So that is obviously very good news. And if we talk about the one key metric that really, really is important to a name like this, because in the young life cycle of a company, you're going to have some losses up front, but over time, you're going to become profitable. And then it's all about growth. And if we take a look at this next chart here that I have, I've got the price of Tesla stock, and I've graphed that in comparison to revenue, quarterly revenue. So if we take a look at this steady line here, this one that's just moving up and moving up and moving up like that nice 45-degree angle, that is the revenue for Tesla. We can see the stock's done all sorts of up and down movements here, and now we're down in the $300 range. But with revenue consistently moving higher, and we can extend that there a little bit, we can expect the stock price at some point to move higher as well. That's why Tesla is my top stock pick for the week.
All right, Brian, thanks for that. Ryan, you've got a restaurant company.
Yes, I do. I'm going with Wingstop this week. Ticker is WING, Wing, one of my favorite tickers actually on Wall Street. Fast casual and delivery-based chicken wing chain. Reported a great earnings report last week, and we're already starting to see analysts kind of catch up to those results and revise upwards. It was just added to the Zacks rank number 1 strong buy list this morning. So like I said, great report last week, adjusted earnings of 25 cents per share, topping the Zacks consensus estimate by 5 cents. Those earnings were up 19% year over year. Revenue also topped our consensus estimate, and that domestic same-store sales, those comps figures we always like to see with any retail type of chain, but definitely in a restaurant. Domestic same-store sales up 9.5%. That's a number unlike you'll see in many restaurants across the entire retail restaurant industry. That's kind of the story with Wingstop, is that you're getting this unique restaurant pick. Looking at the chart, as you can see, has not missed earnings estimates since it debuted in mid-2015. In terms of what the share price and what the consensus for earnings has been doing over the past few years, this is exactly the trend we want to see. Shares going up, earnings consensus going up. Looking at the latest estimates, as I said, analysts already starting to catch up. Within the past week, we are seeing positive revisions start pouring in for the remainder of this fiscal year. But what I'm more excited about is the upcoming fiscal year with strong agreement there. Looking for earnings growth of 8% for this full fiscal year, 20.8%, almost 21% next year. That's going to come on the back of 40% and almost 13% revenue growth. So again, a really, really interesting growth pick in the retail restaurant industry, which we don't see a ton of anymore. I want to bounce out here, as Bolin highlighted, has an F for value, and I know there are plenty of viewers who are going to be concerned about that style score. I do want to say 67 times forward earnings. That's not a great PE ratio. Obviously, a little bit concerned with a stretch valuation there, but that is in comparison to a lot of other restaurant chains that are in much different places in terms of their growth cycle. And I think with what we've seen in terms of the company's track record of surpassing estimates in its short history on Wall Street, and the insane growth opportunities we have here, that investors would be willing to overpay a little bit, if you will.
Okay, and we're talking about both of these on Tuesday, May the 8th. Do either of you own either of these?
I do not.
I own shares of Tesla in my brokerage account.
Okay, well, thanks for telling us that. Don't forget, always more information on stocks and a lot of other stuff on our website, Zacks.com. Get over to the homepage to start checking it out. With Ryan and Brian, I'm Terry Ruffalo.